Hello and welcome to this week's market update for November 13th of 2017. My name is Adam Straseske and I will be guiding you through the market stages and the operating plan. So we always look at the broad market readings first to get a good feel for the market, and then we go into the operating plan. What indexes do we like, which ones were closed, and which ones are we looking at this week to purchase? So first things first, bear market territory, we're not even close. The All World ex-USA Index and the S&P 500 are greatly outpacing Treasuries, represented by this red dotted line down here. So it's looking good for the bulls right now is on the longer term trend. As far as correction risk, a little bit different story. We're seeing breadth decline as the index is increasing, so that's not a bullish sign, that's a bearish sign. And the question has become, will the leading stocks be able to drag the winners higher, or will the losers pull the winners lower? So that still remains to be seen, but right now, because of that, we are in a higher state of correction risk. As far as the stage of the S&P 500, we've got a nice bull channel that's been forming really very, very long time, multiple years, and more recent price action, we're in this tight bull channel right here. Last week down 0.21%. When you see a tight bull channel like this, really what that's telling you is that the bulls are in control, and a pullback will more than likely be a smaller pullback before the test of the high. So we'll see if that plays out this time, but right now it looks pretty good for the bulls. As far as the operating plan, what indexes do we like? Which ones do we want to be involved in? As far as the monthly trend, like preferreds and the All World ex-USA Index, preferreds have come down in price lately. If they decrease much more, then we'll be looking at getting some more. And we'll look at the All World ex-USA, and here are our weekly swings right here from Canada to Australia. All World ex-USA Index, this is our monthly trender. It is winning on the 12-month momentum, and that's why we like it. Not even close to bear market territory. We had a bear bar last week, but still well within this tight bull channel here. We're going to like this one all the way until a 50% retracement, or when the S&P 500 starts outpacing it or it gets below Treasuries. Right now it looks good. Canada up almost 1% for the week. Couldn't get quite a strong enough bull bar to move or adjust our stop up, so we've still got a stop down here, but it was a good week for Canada last week. We'll see if it can continue to the upside, and then we would adjust our stop up below this little red bar here. UK down a little bit over 0.5%. Pretty big bear bar for it, and we're just kind of stuck in this trading range right here. The longer it stays in this trading range, the more bearish we get on it, but right now it looks fine, and we've got a second purchase range down in here and an original stop down in this range, so lots of room to move for UK. Japan up almost 1% for the week. Only thing we don't really like about it is we have this long tail at the top. We prefer to see the bulls buy into the close. You can see we had a long tail right here, and then we had a correction. Good thing for this, any correction more than likely will be sideways to slightly down. That remains to be seen, but that's what we'll be looking for in the coming weeks of Japan. Oil up almost 2% for the week. Still up on the top of the trading range. We've got a second purchase price down in the bottom third of the channel right here. We'll see if it can hold and continue this advance. Treasuries, doesn't look good for Treasuries, down a little bit over 1% for the week. And we really thought after this, after many weeks ago, that it was going to advance higher, and then it had a good opportunity to do it this week. But as soon as it got that buy signal came in, then the bears came in. So we'll see if it can hold in this trading range and eventually break to the upside. If it does come down to the downside, then we'll be looking at purchasing the bottom third of the channel. Australia up over 1.5% for the week. Looks good for it. Looks like a high close, high relative close. We've got a second purchase range represented by the green area right here, and initial stop down here. If we get a strong breakout to the upside, then we'll adjust that stop loss up. But right now, it looks good for Australia. So for our current operating plan, we want to build in the all world ex-USA. The U.S. aggregate bonds did not trigger, nor did the large cap U.S. stocks for the swings. So we'll continue to watch those, but nothing as far as the weekly swing goes for this week. And then on the monthly trender, we want to build in the all world, and then also quite possibly the preferreds, which I don't have written down right here, but quite possibly the preferreds, but it's going to have to drop quite a bit more for the preferred signal to kick off. So that is it. You have a great week, and we'll talk to you next time.